I was at Goldman for 5 years. I was an equities trader at Goldman. Half that time was spent on the institutional desk trading Australian equities, and the other half was at GSAM, which is the asset management division of Goldman.
How's it going, Tristan?
Tom, good. Good day.
You just presented on technicals.
Technical analysis, that's right. Yeah, I thought it'd be good for the guys to hear a bit about technicals, given my background as a child market technician. I know that technicals is an area that's very poorly understood by retail and also by institutional traders. So yeah, just wanted to run through the basics, talk about supply and demand, give them some things to think about, and hopefully at least get them on the right track when they are using technicals. Yeah, it's not a major part of the process, but it's an important part of the process. You shouldn't use technicals in isolation of fundamentals, and they should be a smaller part of the overall process, but they're key for the timing of entries and exits, and also for filtering trade ideas. And when you're using shorter time horizons with trading, as opposed to longer term investing, the entries and the exits can be a big part of the P&L. So I think it makes sense to spend time studying technicals and getting to know them as best you can.
And so this idea of the process, I was speaking to Anton yesterday about how retail traders can and should approach finding a process when coming into the market for the first time. And he suggested speaking to you about this idea of matching your personality
The process?
to the process.
Yeah.
Why is it so important?
Well, in my view, and this is just my opinion, but in my view, it's the most important part of trading is getting a match between your personality type and your process. And the reason I think it's so important is because when you're losing money, which you will always be losing money at some point, if you don't really understand and believe in your process, whatever that process might be, you'll lack the conviction in those ideas to stick with them, and you'll be shaken out of trades very quickly, very easily. So being a good trader is being good at losing money, and you can't be good at minimising downside unless you really believe in what you're doing. And if you're being forced to adopt a process that doesn't really suit your personality type, or it's a process you don't really believe in, i.e. somebody else's process, then it's much harder to actually have the conviction to execute that strategy properly.
And how can retail traders who perhaps have lots of different options and have lots of different paths they can take in their personal trading career, how can they apply this idea?
Well, I think at the end of the day, you should take a strategy that's been tried and tested that appeals to you and adopt 80% of it, and then try and make 20% of it your own. So I'm not suggesting you're making up a whole thing on your own from scratch, but when you do think you've found a strategy that resonates with you and that you think kind of suits the way you want to do things, be flexible and open when you apply that strategy to bringing your own process into it, your own personality into it. And it's just a matter of trial and error. You spend time reflecting on yourself as a person, thinking about the kind of person you are and the kind of risks you like to take, the sort of things that resonate with you in terms of personal philosophy. And then as you are studying the process that you've chosen, always go back to thinking, which parts of this do I really enjoy, which parts don't I enjoy, what parts suit my strengths and my weaknesses, and try and shape it from there.